Hello, I'm Rob Samuels, VP of Investor Relations. I'm here with Mara Chief Financial Officer Salman Khan to talk about the financial results for the first quarter in this new video series we are calling Unpacking the Numbers. Salman, always a pleasure to be with you. So
Pleasure to be here, Rob.
let's start with some context around the quarter. Can you just walk us through the story behind the quarter's numbers? What stood out to you in the results?
Absolutely. Thank you, Rob, and thank you for our listeners to listen to this new podcast. In terms of Mara, in Q1 we had a 30% increase in our revenues. That took us to almost 214 million in revenues versus 165 million in revenues of Q1 of 2024. That's a significant increase. How did we get there? We increased our exahash rate significantly at 54.3 exahash per second in Q1, which represents about 95% increase compared to last year, the same period. It's been a growth story for us over this period of time for which we're excited. But while we did this over this year and since Q1 of last year, we also reduced our costs significantly. Let me walk you through that. Our purchased energy cost, and just a reminder, we have recasted our P&L or income statement to reflect and provide more clarity around our cost structure. As you see in our income statement, now have this owned and operated business model while also having a third party hosted business model. So we have our 70% owned and operated capacity versus a 30% hosted model. As you remember, last year we began the year with 0% owned and operated, and we converted to 70% owned and operated capacity at the end of last year. That has directly benefited us from a cost perspective and operations perspective. So for example, our biggest line item in income statement is the purchased energy cost. And that has been on a unit basis, on a Bitcoin basis, has been around $35,728 per coin and represents about 4.4 cents per kilowatt hour. The purchased energy cost per Bitcoin has gone down significantly for us over this period of time, which is a direct cost for on our income statement, representative of how much electricity are we consuming on a kilowatt hour basis, which was around 4.4 cents per kilowatt hour. And that is reflective of our strategy to have a healthy mix of owned and operated versus hosting business model. On a cost per petahash basis, on the other hand, we have continued to show improvement on our costs. And this is all inclusive costs. We have significantly reduced our cost per petahash basis during this period of time. And just a reminder, when we talk about petahash, that is reflective of how much exahash have we deployed and how much cost are we incurring compared to that on a daily basis. And that gives us a significant improvement compared to the last year period. On the other hand, when we look at our net income, remember our net income includes the impact of the fair market value. A quick reminder, fair market value of Bitcoin is an important element in our income statement. We are the second largest holder of Bitcoin from a public company standpoint, and it is important on our P&L. It does flow through our income statement every quarter. So, for example, if at year end, if the Bitcoin price has gone down 10% since then, it will flow through our income statement in this quarter. And that is exactly what has happened in this quarter at Q1 of 2025. Our fair value of Bitcoin loss is reflective on the income statement, which, by the way, as of today, has been fully recovered since then. And that's the nature of our accounting practice. That is the nature of the FASB rules that we use. We're excited about our HODL, but we will expect to see fluctuations in our income statement as a result of Bitcoin price going up or going down. With approximately 48,000 coin on our balance sheet as of today, we fully expect that $10,000 change in price would result in approximately $500 million impact on our income statement. And that's reflective of the scale that we have of the Bitcoin that we hold on the balance sheet.
Just in terms of our shareholder letter this quarter, we speak about two key priorities that will enable us or Mara to transform into a vertically integrated digital energy and infrastructure company, primarily driving capital and operational efficiency through growth, as well as advancing our technology businesses. So can you give us just some more color on both of those key priorities?
Yeah, that's a great question, Rob. Capital efficiency and operating efficiency is very important for us. And as we have stated historically, our return on capital employed, which is an important metric for us, that compare that to any other industry, and especially with the capital intensive industries like mining and other industries, our return on capital employed remains better than many other miners. And our strategy has always been that we continue to have a healthy return on capital employed while also reducing our operating costs. And as you have seen in this quarter, an important highlight for everyone to remember is that we have talked historically about low cost strategy. And that low cost strategy means that despite Bitcoin price or the hash price or the global hash rate doing whatever it does in future, our expectation and hope is that it will go up. But should it fluctuate or it become difficult for Bitcoin miners to balance the income statement at that point in time, we, with our strategy of low cost mining strategy, we will still be able to continue to make money from a long duration of time. And we believe the business model in future is going to look different. So what have we done with that? With that strategy, we have gone out and acquired, as an example, a wind farm. And that wind farm has over 100 megawatt capacity and over 200 megawatt interconnect capacity. That is an amazing story for us because despite whatever Bitcoin price does, we can put our miners into those wind farms, which we are in the process of energizing right now. And we expect that as the wind blows in Texas and the grid is congested, we reduce the congestion of the grid by consuming that electricity and produce Bitcoin from it. And guess what? The operating cost of that mining or that wind farm is minimal. It's fairly small compared to other commercial operations. So we can put our fully depreciated miners in there, as we call the AARP program or asset retirement program, or we can put even new miners in future depending on pricing conditions. And that allows us to continue to mine whenever, despite the fact whatever the price of Bitcoin does, despite the fact what global hash rate does. And that's the exciting part for us. So that's the future for Mara. We expect more and more shift towards low cost strategy that will help us drive better arbitrage and better value creation for our stockholder in future.
Terrific. Do you want to just give a quick little summary on what we're doing in terms on the technology side of the business?
Yeah, this question is important for us. As we had stated in our annual report, annual shareholder letter a few weeks ago, a few months ago, we have been deploying our two-phase immersion technology in our own operated sites. We have also, in addition to that, deployed at two additional customers, one internationally and one domestically. And that process is in progress as of now. We are gathering data and deploying this equipment into operation in real world and gathering a lot of data around how much cost efficient this becomes and how much efficiency it results in the operations of Bitcoin mining. Also, in addition to that, liquid cooling is an interesting thing. It's not just specific to Bitcoin mining. The use case of liquid cooling is beyond Bitcoin mining, and it could be industrial use. It can be used in AI. Some of the chips out there, next generation ones, are supposed to be cooled with liquid cooling, and there's a lot of excitement around that. So this year, 2025, is going to be the year where we test these technologies in real time, real basis. We get feedback from our customers, and we share that data at some point in time later this year, for which we are very excited about.
Terrific. So, Salman, we're constantly getting the question, are we planning to accumulate more Bitcoin by purchasing it in the market, similar to what we did at the end of last year with the convert transactions? So, do you want to just kind of touch on that subject? I know, obviously, we mine Bitcoin, we've purchased Bitcoin. What are our plans for the future going forward?
Rob, as you know, we have the second largest Bitcoin HODL position, and we're very proud of that. It's a treasury asset management strategy for us. Bitcoin has, in the last 15 years, 11 years, it has produced the best rate of returns compared to other asset classes. It's a store of value, and we are bullish on that. Having said that, we are a Bitcoin mining company primarily who also likes hodling. And I would call this a twin turbo strategy where you could drive an engine. You could drive a car with a single turbo engine or without a turbo engine or a twin turbo engine. You will see the difference in all three of them. And we are not just a treasury company. We are not just a Bitcoin miner. We like to accumulate Bitcoin while we are producing through our data centers, state of the art technology that we deploy worldwide, 4 continents, 16 data centers. And we hold that Bitcoin on our balance sheet as we expect the Bitcoin price to go up from here and create a double return, one from producing Bitcoin from one of the lowest cost per coin from an direct energy cost perspective in the sector. And then on top of that, we also want to accumulate Bitcoin. So that's one side of the spectrum. The other side of the spectrum is where we go out, what we did last year. We raised more than $2 billion, most of it in 0% coupon, and bought Bitcoin from it, other than managing the balance sheet. Look, we can't give guidance as to when and what we will do from a capital raise perspective, or whether we will buy Bitcoin or not. This quarter also, we went out and bought some modest Bitcoin. In terms of going forward, we want to be opportunistic. We want to find opportunities where it makes more sense to either invest in our core business, which is Bitcoin mining, or does it make sense today based on the projected price of Bitcoin in future and the tailwinds that are out there, whether it makes more sense to go out and buy Bitcoin. So it's a speed to the market, whether you want to accumulate more Bitcoin today or you want to invest more in into our core business so that we can produce more Bitcoin in the future and accumulate that over a period of time. So the answer is that as a sophisticated twin turbocharged engine company, we want to be able to focus on accumulating Bitcoin, whether through mining or through purchase as that opportunity arises.
Perfect.